Well, like here's a good, and this is for you. You'll remember this, Stephen. Remember the whole stuff move?
Yeah.
It's like the same thing. Remember how many times you'd buy a high a day break and you'd get tank and you'd be like, what the hell is going on? It's the same thing. It's not the same thing. It's just the opposite thing. So they're doing this. So back when everyone would short those high a day pushes, with a set risk, because they would always stuff and they tank. Now they're just doing I remember the stuff move from 5 years ago. Now it's the exact opposite. They just run it down and then they squeeze you back up. Welcome back to the Steady Trade podcast, everyone. We've got the whole team here. Got Kim and Stephen. Gonna get right into it today. We've got a topic that it's all about little victories. I kind of think of Stephen and I as having a marriage now. We're 3 years into this marriage. Thank goodness the world is more tolerant in 2020. 30, 40 years ago, Stephen and I wouldn't have been socially accepted to be married at this point. But much like with your wife or some sort of significant other, you fight your little battles. You appreciate your little wins here and there. And Stephen reached out to me the other day with, I thought, a great topic. Number one, he did two things. The greatest thing he did is he spent, I believe, the entire weekend, I think he hit me up on a weekend, tracking data, okay? So he was, he was reviewing his data, something, if you go back to the 3.5 years ago to the first episode of the Steady Trade podcast, we're going to be telling you, track your data. And here he is, even though he's having the best year of his trading career, he's spending the weekend tracking his data, looking for inefficiencies. Looking for ways to improve his game. And, we talk about it all the time. My favorite analogy is like the NFL quarterback. The NFL quarterback spends an hour on the field a day or an hour on the field a week, but it's everything they do those other 6 days, 8 hours a day, 10 hours a day, 12 hours a day that gets them to the Super Bowl or gets them to 5 Super Bowls or whatever it is. And by tracking data, that's how you improve that edge, find your edge. And then number two, how you come to, kind of an epiphany. And I was pleased on this one. So Stephen hit me back and he's like, listen, tracking my data. He's like, you've been lecturing me about avoiding pre-market. Now, I'm not saying never, but avoiding pre-market. And he was basically breaking it down on his win rate and how he thinks he can definitely improve his game. So really, I kind of want to give Stephen a lot of the mic, for, as they say, for this episode to kind of go over what he found, because I want you guys to avoid pre-market trading. And I say it all the time, but I want Stephen to convince you too. So welcome, Kim. Welcome, Stephen.
Yeah, no, it's an interesting situation because I'm in Dubai, and because the market, like say 7:30 in Eastern time is like 3:30 in the UAE time, and because say what time we're recording now, midday in Eastern time is kind of close to bedtime for me in the UAE, and should I travel further east, it's even later. But the problem with that is I want to trade the earliest possible hours. So I was in a habit of trading the hours that were convenient for me, and I was trading a lot of pre-market. So I thought, maybe I can find an edge there. And for years, I thought that the hardest worker in the room makes the most money. Do you know the old saying of the man who's first in at work, first in the door in the morning, last in the door at the nighttime, is the guy who works the hardest, rises the fastest, and is the best, and does the best. But it's not true, and trading's a funny discipline, and it just goes back to the quarter analogy that you said. It's like, it's about the stuff that you do off the field for on the field, but often with trading, the less you do is sometimes the more you do. It's about the stuff that you put on outside of the game. So what hit me is I was watching a Roland Wolf DVD, who's just passed 1 million or so, and he was on a private jet with Tim Sykes just a couple of weeks ago, so well done to Roland. But Roland said in his DVD, he's like, I used to trade pre-market and I used to trade after hours.
Oh, I didn't realize that. I don't know if I ever knew.
Yeah, no, he killed it. He said he went through his data and he found out that most of his results were so inefficient and incoherent that he was just like, I don't see the point in trading pre-market. And afterwards, it's just a burn of energy. And then you said, there is no edge in pre-market trading. And then what happened to me is I just thought, last month, what was it, June?
Yep.
Yeah, last month I thought I've had several $1,500 losses. Oh, I've had several $300 losses or 300 gains. That should have been $1,500 gains. But I went on a rate up before I took the journey down. Being short too early pre-market, coming up and then dropping down. So I went back through my data and I analyzed it and basically found that a good 70% of the time, it would have been better to just be in at the open. You've got to clear ahead. You're not pre-engaged emotionally with the trade. And purely mathematical, from a mathematical perspective and point of view, it's probability-wise better to be in at the open.
So before we move on, I want to know the how, okay? Because, again, the listener's probably going to be, I think this is one thing I will fault us for, because I get these questions. We say track data. I mean, and you probably get it too. A lot of people are like, okay, how? Okay, it's like, okay, build a house. If you've never built a house before, you're like, okay, I don't, so give me what was the process? What were you looking at? How is if someone's trying to replicate this type thing?
No, but look, I've tracked data and I've done it in depth. And I've got like YouTube videos and Excel videos.
Okay, good.
On the ins and outs and specifics of how to track it. This wasn't such a big revelation. It was pretty basic. You've got to review your trades. And many people don't, and that's why Profitly is good, because you can go back through your trades. And I wouldn't say review your trades. I'd say track your trades, review them, and then review them again, and then review them again a week later. But people don't even review them once or track them.
Is this on an Excel spreadsheet? You're putting in everything you've done? Or how are you? Like when you did this, how did you do? Oh, Profitly.
Yeah, no, look, I just use Profitly and I put what my entry is, what my exit was, how many shares I traded, and I publish it. And then when I saw that I was having quite big losses in July in June compared to April and May, I was just like, well, what's going on? What am I doing wrong? And we know that there's a shift in the market, right? There's been an influx of volume, 200, 300, 400, 500 million shares a day, where we previously expected a big day would be 50, 60, 70 million.
Were you not trading pre-market in April and May?
I was, but there wasn't as high volume. So as more demand came in, stocks rose more quickly. And the flow that I had in my strategy got further exposed to the point where I could see it better.
Gotcha.
But the flow's always been there. But I went through I've got a strategy where it's very pre-market led. So I'll track stocks that gap up in the market more than 30% pre-market. So it's very pre-market driven. And then I'll look for indicators that this stock on its first green day will more likely fail than will run. And if I think that it's going to fail even before the open, I would take the short in it pre-market, thinking that it will never reach this point again. Now, what happened was, once you nail two of these pre-market, and then you say one of them goes pre-market, you think, oh shit, fear of missing out. And it's one of the big problems that we all deal with. You think, God, I nailed that one and I missed that one. And then you start getting it into your psychology that pre-market trading is effective. But when I actually went through the stats and broke down all of my trades on this specific pattern, I say I traded this pattern 15 times. I went through every single time that I traded, and I thought, would it have been more profitable to have not been there at the market and not traded it pre? And it worked out that about 70% of the time it would have been more profitable just not to trade the pre-market at all on that specific setup. But it's the psychology behind it that makes you feel like you're going to miss out. And you remember the wins and you don't remember the losses. You remember the good times and not the bad times. You forget the bad times because your memory doesn't want to remember them.
Yep,
but it leads you to trade inefficiently. But even so, even if it was 50-50 and sometimes pre-market trading works and sometimes it doesn't, pre-market trading is so dangerous that stocks can walk up on air, is a good analogy that I saw. Like AIHS, if we just look at the other Chinese stock today, what was the ticker of today's runner that fell apart at the open? Imagine you shorted that at the open compared if you try to get a position pre-market.
JRJC. Yeah.
JRJC. Look, that thing was rising on air.
So we're just real quick, we're recording on 7/15, so July 15th of 2020. Ticker Steven's talking about is JRJC, went ballistic at the open and then just got completely destroyed. Probably ends up closing on the low of the day, but sorry, I just wanted so they knew. Yep. So,
but I mean, just for example, like JRJC or AIHS, it's very egotistical, or it caters to the ego to try and catch the top pre-market. But you can end up shorting 830, adding 845, adding 9, adding 915, and before you know it, you're at the open, and you think I only want a quarter size or a third size. You're in double the size that you're meant to be at the open. And you're sitting head in hands, glass of wine. Please don't rip at the open. Please don't pop at the open because my account is going to take a dent.
And that's always been my biggest point with you because, again, if this is your first episode of the Steady Trade podcast, I mean, Steven is, 75% short biased. And I mean, it's so tempting to see stuff like JRJC. And here's the thing. This is what I love about JRJC. This episode will probably come out in a week or two. I'm willing to bet, drop us a comment. I'm willing to bet, each of you listeners like 25 cents. I don't want to pay out too much. Maybe a penny. We got a lot of viewers. I mean, JRJC will probably be 80% lower than it was today. But that doesn't help you when you short it at 8 a.m. and it doubles. I mean, literally doubles. Went from 18 to 34 in a matter of minutes. So even if you have a good win rate, I mean, you could have a winning 70% win rate, but when it goes bad, it goes so bad that vice versa, had you waited on JRJC till it, midday, roughly 10:30, 11 a.m., it breaks support at $25. It breaks VWAP, and it's currently $8 a share lower right now. So, I mean, it's a great example. You would have gotten destroyed in pre, but if you can wait for the thing to fade and gap down, and it's a sketchy Chinese finance play. I mean, it's
still scary though. I mean, it was 100. It was. Can I tell you? At most brokers, nearly all of them, it was $100 for 100 shares to borrow.
Was it really?
Which isn't bad, Which isn't bad because if you take 100 shares and you get 10%, it's 2,600 profit. So it's bad, but it's good. But the other thing about pre-market trading is what with trading, you need to risk off levels with volume.
Yes.
And what level are you really going to probably risk at? Pre-market. You can't really risk at pre-market level because there's not enough volume. And the other thing with this as well, and it's something really that I've started looking into, which I haven't looked into much in the past, is how much of the stock is institutionally owned and how much of the float in the stock is privately owned. Because with the likes of WIMI, you saw WIMI, 25 million float, it should be trading pretty thick. That is so highly institutionally owned and owned by insiders. That's actually a 2 million float. So you've got all these traders thinking, look, light volume, it's high float, short. What do they do after hours, pre-market hours, after hours? What do they do? They just ramp it up. Same with EQ, they've ramped it up to 30 in the after hours. You've got to be so careful because it's not retailers versus, it's not shorts versus longs. And this is Tim Curtin quote. It's not shorts versus longs. It's retailers versus the companies and institutions and hedge funds that can manipulate these stocks so much more. And the best time that they can do it is when it's in the lighter trading pre-market and after hours.
Isn't that what Jane Galena said about didn't she speak to that a little bit in that interview we did with her about the hedge funds and the institutional players?
Yeah, she was saying follow the dark pools.
Okay.
Did she say follow the dark pools?
I thought
where the big money goes, you follow.
Yeah.
Yeah, no, it's true. If you can follow the dark pools to try and piggyback the momentum, but this is more institutions and hedge funds and companies taking advantage of light volume, just pushing it up.
I mean, that's been my conspiracy theory going back to 20, when I saw the big change was 2015, where these just low floaters where, for the first 10 years of my career, these things would spike and fade. And then all of a sudden in 2015, volume went through the roof. You'd see that spike, that pull, and then that re-break and that re-break. And I just think, this is strictly my, Bigfoot theory, but it's just like, I think whether it's a boutique hedge fund or algos or whatever, they run these things up, then they sell them off, and they wait for people, and they know what people are going to do. They're going to short into that move, and then they rip them back to the upside, just like WIMI is just, it's a joke, it's like, but we've seen that a million, especially on a Friday afternoon. It's just like, it's like, how many times is this going to repeat? EQ is the same thing,
Yeah. But
so Stephen, here's a question for you. The thing you said at the beginning that was so fascinating was you realized you were trying to trade at a time of day that was convenient for you. So like, what do you do now? Like if this pattern is not going to serve like your time frame, like with work and everything, like, so what are you going to do now?
I just watch Friends pre-market.
Okay, good.
No joke. I watch Friends pre-market, and because if I look at the screen, I get tempted to make mistakes. So I do everything in my power to not look at the screen. And then instead of doing research, because I was chomping at the bit, I would be getting on to do research at 7 a.m. Eastern. Wow. And now I won't start doing the research until 8:30. If it's a really busy day, I'll do it. I have to force myself to do less work and be better productive and more focused in the more important hours.
Did you start this week? Did you start this week to try to do it different?
I'm disappointed I missed the Chinese ticker today. I was just too scared. I was too scared to take it. But yeah, I'm all right. But it was more the fact that you get yourself in trouble. When you're short in pre-market, the volume can move up. Unexpected things can happen. You don't have proper risk levels to risk off. And on top of that, the probability is just not there ultimately. There's just no point. There's not much point doing it, honestly. And you're spending more time doing something you don't really need to do.
I like that too. It's like, listen, so, one thing I do and I teach is, I tell, again, it works for me because I'm in the Eastern time zone, but I like the idea of getting up early, doing, running your watch list, looking the news, getting ready. But then something that I talk about all the time is, then go for a walk, or go to the gym, spend that 8 a.m. to 9 a.m. hour resetting after you've done your watch list, you've done your research, you've read all the overnight news, you know what's going on in the world. You saw Goldman Sachs blew out earnings, market's gapping up, you see the latest virus numbers, you got all that in your brain. Then go walk the freaking dog, go get a coffee, go whatever, and then you're not burnt, it's like, I don't know, it's just, I'm not saying it's wasted time, but it's like, take that time to do something else, decompress, then come back and attack at the open.
It sounds like an integration time you're suggesting.
Fair enough. I like that. Yep. So
it's like integrating all that you've just absorbed and read and noticed, and then you're allowing it to kind of seep in, digest, and then it becomes the lens in which you look at the day through.
Well said. Just like, again, I know I'm trying to increase my writing output, but they tell you that, do that writing and then come up the next morning and reread it. And it's like, because your brain's working, even though you're not sitting there staring at a chart, your brain's still working and you're thinking about all these things, you're thinking, okay, last time this one spiked, and even though it's not in the front of your mind, it's in the back of your mind.
Yeah. So, yeah. So here's a question as a person who lives in a weird time zone. Hawaii time zone is 6 hours behind East Coast time and 5 hours behind because we don't do daylight savings time. So, we have these two time zones. So perhaps Hawaii, but perhaps just California time, or people are going to live in different time zones, probably internationally too, right? We have viewers that are international. So how do people navigate that? Let's just take Hawaii because that's where I am. So like, how would I want to potentially create, okay, this is going to be, I can't get up at 2:30 in the morning. So how do I work with, this
well, what
weird
I would
time
tell
zone?
you, especially as a newer trader, is I'm jealous because, I mean, what time is it right now?
Now it's about 7 a.m.
Okay, so
Yeah.
and it's 1 p.m. Eastern time. So I mean, the number one pattern I go on and on and on about is these afternoon breakouts. And to me, I think, especially as a newer trader like you could get up at 6 a.m., which is noon. You could look at the biggest gainers. You could run a scan, see which ones are hugging VWAP, which ones have unusual volume, which ones are ready. And then you're just looking for those moves into that 1 p.m., 2 p.m. window. So I think it would be ideal to me. Now, you got to manage it with your job and stuff like that.
Sure.
But I think, I mean, listen, I would, first of all, I'd love to move to Hawaii for the weather. I would love to move to Hawaii because they don't observe daylight savings time, which may be the dumbest invention in the history of mankind. But to me, it would be ideal because, you could trade these afternoon breakouts that are so consistent now. Now, the market might ultimately change, but for 3 years now, these afternoon high volume stocks, that are low, that are float rotating, that are in a hot sector. I mean, WIMI was one. EQ was one on Monday, VXRT yesterday, BE is getting ready to do it today. So that, I think it would be ideal. Now, ultimately, the market will shift. I used to be way more morning focused, but I don't know. It's like at the end of the day, you just if it's like if this is really your thing. I mean, I know people that trade the U.S. markets from Australia, and they're basically 12. I mean, they're trading at, the market's opening at like 11 o'clock. It's opening at like 11 o'clock at night, and they're trading through the night. So I don't know. So
I did a night shift once at a hotel when I was a front office manager with the auditors, and they lived that way. And I remember like doing it with him for a couple of nights, and I was like, I cannot be a night auditor. Like I cannot do, but like some people can. I think some people, he loved it. He had his morning. He loved, working that night shift, but you got to find out what you can do. So Stephen, so what are you going to do now? Like now that this has been your habit, am I right, for 3 years, or is it more than that?
No, but just first thing about your time zone, I just wanted to add that the best thing about, if you're up at 7:38, you can take the trade at 1:32 p.m. when you get the confirmation that the move's about to happen, put your stop in, and then come back at the end of the day when you finish work, or check at lunchtime and think, did that stock break out? Because if it's broke out in after hours, it's probably going to be quite high, and you can just sell it. And it either worked or it didn't, and that's the beauty of it. You could just spend 15 minutes every day thinking, all right, these look like good setups, put the stops in, check it at lunch, and I'll sell it if it worked, and if I get stopped, I get stopped. And I mean, that's 15 minutes a day, and if you know what you're doing, it's the best paying job you've ever had on a minute by hour basis. No, I'm serious. But for me, nothing really changes. Like I would always I used to sit from like 7:30 till midday, and sometimes I'll check the afternoon, sometimes I won't. But now I'll just sit from 8:30. So I just take an hour out of the day and I'll meditate. I'll go for a run, and I'll like speak to friends. I'll have something else to do. I just cut a bit of the time out of the day. I just don't take the trades, or I'll just watch. Watch and like really not take the trade. And if I do, like really be in mind having a tight stop out. You know what I mean?
Were you shocked when you saw it was 70%?
No, it wasn't a surprise that I was early on only shorts. It's something that I knew, but I didn't want to admit because I was consistently down 300 before I made 700, and then if I went down 500, I'd just cut it. And then sometimes it would be more, like I'd go down 800 before making like 2,000 or 1,800 if I played more size, or sometimes I'd go down 800 to make 800. And every time I knew, I was just like, I've got fear of missing out here. And if I just short all of these at the open, instead of being up, down 800, then up 800, I'm just up 1,600 without the worry. And then once my probabilities of it, I can take more size. And then that 1,600 is not only 1,600 because I got both sides, it's also 3,200 because I doubled the position because I'm not going down as much. So I just realized that it's better to be safer. And then once you get the safeness, you can add the size. But you can't be going down 700 on a trade before you go up 700. It's ridiculous. Even Wimmy blew up a lot of accounts there. No, EQ blew up. I mean, and the other thing you can't do is in this market, you can't add the stocks that squeeze.
Yeah.
Sometimes when stocks squeeze, they go back down. But you cannot add to stocks that squeeze. I was in Boxel. I just cut it at VWAP and squeezed like another. I was in Boxel today. You want to check it?
Yeah. I knew I was
I'd
moving.
be interested to know your thoughts on that because Boxel, it's up 2 days in a row. Generally, it's not up more than one.
It's breaking the high day right here into the 2 p.m. window, by the way.
Is it?
Yeah. It went red to green at 11 a.m. Okay. It held around.
I cut it at VWAP into that push.
Nice, beautiful.
Yeah.
And so it's holding 250, and it's spiking right now. Volume's coming in. It's 2 cents off of the high day right now. So that being said, let's see what Boxel does. Look at Boxel on July 15th too, because I mean this is the setup. It's traded 49 million shares, on dubious news, but it's just.
Yeah. But the thing is, you get the blow off top volume. Not anymore because it's traded so much volume now. But it looked like blow off top volume on the previous day. But you also had the massive. It didn't hold its highs at all, and it never runs 3 days or 2 days. So when it has that big wick on the daily, and it's a first red day, I'm like, all right, first red day. I mean, I made $80 on it on this trade, but you could have lost. The market just doesn't work. First red days don't work anymore. A lot of people have said that as well. First red days don't work anymore.
Yeah, my favorite saying lately is I say this constantly in webinars. I'm just like, nothing dies. I'm like listen, you can try first red days, but man, it's
never ever. Like they used to be 80% successful. Now they're like 99% not.
See, and I think again back to my conspiracy theory. I think somebody, whether it be aliens, Bigfoot, or JFK, they look at these big runners, they let them go red, and then they just run them, man. And that's where I think when you got these big runners in a hot sector, volume, news, all these things we talk about, trade the red to green. At least the beauty of a red to green, like on Boxel, if you bought the red to green, you're in at like 190. You stop out at the low of the day, you're out at 170. You're risking 20 cents a share, and it just hit a new high day right now. You got 60, 70, 80 cents upside to risk 20 cents. So.
Yeah, but do you think that, because these patterns are absolutely identical, like I've been watching these patterns since the market's changed. I've seen the same intraday pattern constantly. So, for example, any stock that, say, it washes at the open or it spikes at the open, but it drops below VWAP, any stock that pushes above VWAP, then dips below VWAP, and then reclaims VWAP, 99% of them rip. And like, say, 9:45:10, is human emotion identical every single time? Or are market makers and they thinking this is a bloody brilliant way to manipulate people, and we're going to do it again and again and again until it stops working?
Yep.
Which do you think it is? I think
it's them.
Yeah, it has to be.
It's the guys in the cigar-filled room. That's my opinion. Is they're just they recognize this, and again, I'm not saying I'm as smart as some algo or hedge fund. They recognize the same thing I did in 2015. I'm like, I was 90% short bias from 2007 to 2015. 2015, I'm like, this just doesn't work like it used to. And I'm like, I keep getting tricked. I keep getting tricked on this shit. And I'm like, finally, I'm done. I'm flipping the other side, So.
But the market maker's game is, how can we absorb as many shorts as possible?
Here's a good, and this is for you. You'll remember this, Stephen. Remember the whole stuff move?
Yeah.
It's like the same thing. Remember how many times you'd buy a high day break and you'd get, tank, and you'd be like, what the hell is going on? It's the same thing. It's not the same thing. It's just the opposite thing. So they're doing this. So back when everyone would short those high 8A pushes, with a set risk, because they would always stuff and they tank. Now they're just doing the, I remember the stuff move from 5 years ago. Now it's the exact opposite. They just run it down and then they squeeze you back up. And it'll probably 3 years from now, it'll probably reverse again. So
yeah, but I think the stuff move, maybe I'm less affected by it. But I think the stuff move was less deceitful. Like, fair enough. Like they let it push up and then they shorted with a load of volume. But it's not as deceitful and nasty as the tricks that they're playing now. And maybe I'm more.
You're only saying that because you're short bias and they keep smoking your ass.
Honestly, thank God I've got some decent discipline these days, because if you don't have discipline in this market, my God.
This is my question for you. How do so you're having your greatest year so far. How do you think Steven from 3 years ago would be doing right now?
Worst year ever.
And I agree.
You have to. This market, honestly, right now, this month has arguably never been harder for shorts, I would say. I'm up about $4,000 this month, and it's a bloody miracle because every stock is against us. Every stock is against us, and I'm like, cut. Thank God that one worked. That's how it basically is right now.
And this is my, again, I know I'm the dinosaur here, but see, that's what it was like in 2007, 2008, 2009 for the longs, man. It was like, if you went long penny stocks back then, anyone that had a clue was like, you're an idiot. It's like, what do you and it's just the exact opposite of it was a decade ago. And then, I always think of the market as a big wheel. If you're listening to this podcast in, 2025, you'll probably be like, oh, it's the greatest time ever for short selling. It's just I compare it to fashion. It's like, 5 years from now, bell bottoms will be back in style. 5 years from now this will probably get me canceled, but cargo shorts will be back in style. Not that cargo shorts ever were in style.
That's worth being canceled for.
The abomination of cargo.
Unless you have Magnum PI legs.
Fair. Well, no, cargo shorts are the long ones with all the pockets, man.
Oh, that's true. But they also kind of are bulky, and he's in shape, so he can get away with anything. Magnum PI.
Yeah, the only thing that makes me angrier than daylight savings time is cargo shorts. But
they're pretty horrible.
Can I just ask one other question?
Yep.
When do you think the madness of this volume and this influx of new investors, traders, Robin Hooders, when do you think it's going to end, or will it never end? Is this the new norm?
Actually, it's funny. I talked about this today on a webinar. So I'll very quickly review because we talk about this a lot. Biggest things that changed in the last couple of years: Bitcoin going to 20 grand. I tell this story all the time about being in New York City in December 2017, and everyone was talking Bitcoin. That brought so many people to that trader mindset. Okay, I'm going to try and go fast. Bitcoin. Then we get commission-free trading at basically every broker, not everyone, but 90%. Then we get a stay-at-home order. Then we get no sports. Okay, and I'm a huge fanboy. I know he's, again, speaking of controversial, I'm a huge fanboy of Dave Portnoy. Okay, this guy is a professional gambler. Okay, that's what he did. Professional sports gambler. He built an empire on professional sports gambling. Sports go away. He goes into day trading. And I tell you what, if you watch his videos, that guy ain't ever going back to sports betting. This is my prediction for 2020. It's in his blood. If you guys think I rant like a lunatic, you watch his videos about day trading, it's in him. And I don't think he's going back to sports betting. So I think those are the biggest things. People are stuck at home. Bitcoin, free commissions. Again, whether they're right or wrong, there's no sports betting right now. There's some. And so that's the long answer. Short answer is I think this is the new normal. You got a supercomputer in your pocket. You can do everything from here, from anywhere. 5G's coming. 4G is already fast enough. So that's my opinion, Stephen. Now, at some point, it will change, but
you know what? I think
from now, 10 years from now, I don't know. So,
but I honestly just think, thank God. I mean, you've got more years than me, but I think, thank God, I've got 4 years on all them. Thank God.
Totally.
You know what I mean? Because they've got 4 years of mistakes ahead of them, and that's the 5% that make it. I've got 4 years on the 5% that make it.
Well, listen, WIMI. Okay, I made like $1 a share on that thing, and it spiked $20 a share more. Okay, but then the next day it cratered, and I agree.
Yeah.
Why did I take $1 a share? Because I know what that freaking thing is. Okay, so you're right. That's why I'm so excited. That's why I don't get all these. I mean, there's all these old, bitter day traders that like piss and moan about all the Robin Hooders. I'm like, why, man? Why? I'm like, bring them on in, man. More. Give me more. Send more stimulus checks. You know, do more. Bring more of them in, you know?
Yeah, it has unsettled the market though, and once you get used to a certain way of trading and you get used to certain patterns behaving in certain ways,
that's it.
You have to adjust to something new, I guess. And I've had to adjust to something new. It doesn't mean that you go from a winning trader to a losing trader. You just get knocked off your game and come back on a little bit. But I mean,
some of them are threatened. Some of them are threatened because they have been the only baller in the room, and now they're going to have to deal with a whole bunch of other people. They don't get to, have that same sense of that they're unique.
All the noobs will just blow up though. All the noobs are just going to put money in the market and blow up.
They will, no doubt. Unless they watch this podcast.
Exactly.
and listen to Stephen Johnson and Tim Bohen's wisdom.
And Kim Ann Curtin's.
Well, thank you.
You can plug yourself. This is 2020, man. You got to promote yourself. That's what it's all about. So.
That's right.
Look what I did. I promoted myself, and I was a rubbish losing trader for years, and I still managed to get somewhere.
Yeah, but you always were honest with people, Stephen. I mean, you were promoting yourself and the difficulty you were having, and even when you were, having these kind of hiccups from just being kind of like thinking, oh, it's okay, it's no big deal. And then it was a big deal. You never hit those big deals. You were like, holy shit, this really happened. And I made a mistake. Like, I think that's part of what endeared everybody to you, because you were honest about how hard it was and how disciplined you had to be. And that asks a lot. I mean, most people aren't encouraged in today's kind of culture and environment to be super disciplined. It's not encouraged. It's not rewarded, and yet you spoke about it over and over again. That's why you probably are disciplined now, because you kept,
I'm doing a lot better, but I have to say the amount of accounts that are blown up daily that you will not hear about. People love to talk about the wins. They don't love to talk about losses. The amount of accounts blown up on a daily basis right now will be unprecedented highs. Now, speaking to the opposite of that, building accounts, Kim, when are we doing an episode saying my first trade? Because Tim, I'll give Tim a huge amount of credit. All of the episodes in the podcast, being able to ask him any question that I want, all of the StocksToTrade Pro, and all of the mental advice in terms of fitness and gym and mindset. He's very responsible for a lot of my growth. Now you've got double power, double trouble.
Hello.
You have us, and you're the next one in the family to grow.
Stephen, when the student is ready, the teacher will appear. I'm here for Kim.
The teachers have appeared. The teachers are appearing.
Well, but when you're ready to put real money on the line, unlike Stephen, I'm not trying to get you to short Boxel that just hit new high today, or short Gene. Okay, GENE is the absolute worst stock in the universe, and it's about to re-break out into the 2 p.m. window. I'm not trying to lead you into slaughter.
I have hope now, because I have been thinking, because of the time difference, that I wasn't going to be able to really do this. So hearing this today is, encouraging me, like, okay, I get
now
going.
You got to make it work for your work schedule too.
Yeah, for sure.
But geez, I think, again, if for a new trader, if you were doing like noon to 4 Eastern, I think that'd be ideal, which for you is what, 6 to 10 or whatever. And then you can see your clients after 10 a.m. or whatever.
Yeah. So because I do some East Coast clients and Middle East clients, so what would I do by what? Couldn't I do this 2 or 3 days a week? I don't have to do it 5 days a week, right?
As long as you're disciplined and focus on 1 or 2 setups, that's the biggest thing that I see people screw up is they get a day, okay, and then they're just determined to trade something no matter what, and then their win rate sucks because they're like, oh, well, I'm here, I got to trade something. But, if you're disciplined enough, again, to look at whether it be some of my patterns or Steven's patterns or Sykes's patterns or Roland Wolf's patterns, if you're disciplined enough to focus on that and say, okay, it's not there, I'm going out for a walk or exactly. So that's the biggest thing I see newbies screw up. That's the biggest challenge to part-time traders is they get a day off and they're like, damn it, I'm going to trade something.
No matter what.
No matter what.
That makes sense. That makes sense.
But it's also just new traders in general, because I remember Tim Sykes tying me up in Italy. He was like, he's an overtrader. And I was finding it funny because I trade more stocks now than I did then probably. But the message behind it and the truth behind it is that if you don't know what you're doing, you probably shouldn't be trading any stocks.
But I would say this. You can. I think you'll agree. You're trading more now, but you're only trading.
Tim froze. Okay, so you're still there, Steven. I thought maybe it was I froze.
I just panicked because he looks like a tiger or a Tyrannosaurus Rex.
Yeah. Tim, you just got completely cut off.
Am I back?
Yes, you're back. But you were gone. You started to say something, you got cut off. So please.
I probably screamed so much, my computer probably froze.
Shut it off.
But my point I was trying to say, Steven, is yes, I think you're trading more now, but you're only trading one freaking setup, right?
Mm. Trading 2 and 1 doesn't work.
so I think that's the difference. So
first red dating gap was but the reason I trade more is because I'm scaling in and out way more. I think that's probably the difference. It's very, very. I'm much better at building into an average and getting a good average, and then scaling in and scaling out and trading around a core bit, which is a bit more advanced stuff. I guess it's a bit more difficult to do.
Well, I think we kind of wrapped it up. The biggest things I want you to the listener, I want you to focus on. First of all, thank you, Kim. Thank you, Steven. Number one, track that data. Okay. And as Steven said, you can check out his YouTube. There's a great post. It's 8 years old by Michael Good. Michael Good, friend of the podcast, a friend of mine. I've known him. I got started learning from him, 15 years ago. Just you can go to search Michael Good, track your trades. He's got a spreadsheet there. There's a lot of great resources out there. But the biggest thing is, like Steven said, you got to actually do it. I mean, that's where people, I think, and hey, when I got started, I would half-ass it too, because when you got 6 losers and Gene just hit a new high day, of course, at 1:30 p.m. Anyway, track it, review it. And take it seriously. I think that that's how you spot something like Steven found. And the last thing I would say is just if you're new, I know it's hard to fight the FOMO, but avoid pre-market, avoid after hours. And I'll close with this statement. And you can write this one down as a listener. I say this constantly in pro webinars. I know a boatload of day traders. Okay. I'm very well connected in the day trader world. Veterans, newbies, intermediates. I know no trader, none that are consistently profitable in pre-market or after hours. You win here, you win there, you lose here, you lose there. Nobody I know is like, I'm the pre-market man or I'm the after hours man. And my thing this is what I always say is, do you think you're going to be the one? Okay, maybe you will be the greatest pre-market trader ever, but odds are no. It's just, I say avoid it, learn from Steven, etc. So
can I just say one thing that you should say, but I'm going to remember that you didn't say it, then I'll say it. And it's the actual.
Is that an enigma wrapped in a riddle?
It's the close of all closes, and you're going to totally regret that you didn't think about it. But I know you because I've known you for so long.
Fire away.
Beginners open the market, professionals close the market.
Done. Perfect ending.